Repo rates unchanged at 6.25%. I think we can go across to Supriya at the RBI headquarters. Supriya, unchanged this time around.
Oh, absolutely. He decides to pause, not just last time, but this time around. But I think what is worrying for people who were expecting a rate cut is that he's decided to change the stance from accommodative to neutral. And I think that's the big headline after that. He's not just decided not to cut repo rates by the 25 basis points that everybody was expecting. He's decided to keep rates unchanged. But the fact that he's changing his stance from accommodative to neutral, he's essentially shutting the roads as far as an interest rate cut is concerned for a while to come. He has also flagged off concerns around inflation. The growth figures are down. I'm going to take you one by one. So let's talk about growth. Fiscal year 17 growth, according to the RBI, is going to be 6.9%, and fiscal year 18 growth is estimated to be 7.4%. They expect inflation to be sub 5% by the fourth quarter of this year, which is this fiscal. But for next year, they expect inflation to be in the 4 to 4.5% range for the first half, and 4.5 to 5% by the second half. And there are reasons why they're giving that. I'm going to take you through that. It's a thumbs up that's coming in on fiscal deficit. A couple of words on the banks, but I think the big headline is that the RBI not just decides to keep rates unchanged, but also changes its monetary policy stance from accommodative to neutral, while keeping the policy rates on hold to assess, and this is a big headline, to assess how the transitory effects of demonetization on inflation and the output gap play out. It's important to point out to our viewers here, what is the risk that RBI still sees on inflation? There are three big points there. First is the commodity cycle right around the world. So crude prices is a big point of concern. The second is volatile exchange rate, and they very categorically say that on account of global financial market developments which could impart upside pressures on domestic inflation. And the third, according to the RBI, which has not been budgeted in, is the fuller impact of the seventh pay panel. So those are the big risks, upside risks that exist to inflation. What is the word on growth as far as growth is concerned? They expect growth to recover sharply in 2017-2018 on account of several factors. Number one of which is that discretionary demand will come back. They expect demand to resurge as far as the impact of demonetization wanes off. Economic activity in cash-sensitive sectors like hotels, retail trade, restaurants, transportation is also expected to come back. Demonetization-induced ease in bank funding, and we saw transmission happen to banks. They believe will spur demand, boost consumption for healthy borrowers. That's a good sign, which is why they see growth at 6.9% for this fiscal and 7.4% for the next fiscal. Well, I think the biggest headline from the RBI really is, despite whatever they may say about transitory effect of demonetization, they want to hold on. Their monetary policy stance has changed from accommodative to neutral because they want to assess, they want to study what the full impact of demonetization is going to be on that output gap. And for now, they have decided against any market concerns and any market expectations that rates will be